Well, g'day there, everybody. I just wanted to take the time to speak about the transportational average, also the Russell 2000, as at this Tuesday the 4th of July. First of all, I wanted to wish everyone, or those pertaining to that of Independence Day in the United States, I wish you a splendid time away from the markets on this particular day. You may not watch this video on the Tuesday, perhaps it will be a Wednesday or a Thursday, but it is certainly relevant to current market conditions. Getting into the discussion, I want to speak about the transportational average to begin with. Now, what is interesting about this chart is that, look, although it is somewhat seasonal to be talking about Monday's volume and the candlestick, given, of course, the sort of extended long holiday, we are starting to see both a breakout mixed with somewhat of a short-term top on this particular market. Now, let me just clarify myself and explain what exactly it is I'm looking at. This is the chart of the Dow Jones Transportational Average. First of all, pay attention to the volume. We are very close to roughly half the average daily volume. So when you see these types of trading activities or daily activity take place in between the weekend or a weekend and a market closure, which is taking place on Tuesday, you have to be a little bit skeptical generally of that price action which has just taken place. However, the construction of the candlestick is a little bit interesting. It is what we call a shooting star candle, and of course it is obviously occurring on low volume. What we have is an upper wick indicating selling pressure. At the same time, if you go back and have a look at this, I'll just zoom out so I can show you this. We have been in a sideways channel since late 2016. Now you can see these oscillations which I'm drawing on my chart. It is a little bit messy, but we haven't really completely wave rotated all the way back up into macro resistance and support all that fluently. We have oftentimes, got stuck at about 9,200. What is interesting to note is that we have more or less closed above the high for the first trading session of March 2017. So we're starting to see the potential of a breakout, which is going to flow into our analysis of the industrial average, because really this is what we're looking for in terms of Dow theory and confirmation between these two relevant markets, between the industrial average and the transportational average. The candlestick itself, a little bit of a warning signal. However, if we continue with the analysis and given the push above, again, this intraday high dating back to the 1st of March, what's most important is out of the ADX and the CCI, and both of these indicators are suggesting that we are definitively breaking above this little swing high. So if you pay attention to where we are currently, and really this was the first trading session for July 2017, and you go back and have a look at where we were at the beginning of March 2017, you should see a few differences in that of the ADX and the CCI. If you pay attention to this, what I can probably do, I wonder if this goes all the way down, it does, is that when we were trying to push above this little swing high over here at the beginning of March, the ADX was actually in a reset type of phase. So it was a little bit elevated. It had been historically more elevated back towards December 2016, but the ADX was sloping down. This was saying that it didn't like the trend strength. If you fast forward obviously to what is occurring now, you can see the ADX a very different type of slope, and of course directional slope compared to that of the beginning of March. Now you can see it sloping up. This is indicating that it does like this trend direction. On top of that, the CCI is printing just below 200. We were trying and struggling to get above 100 throughout the months, really mid-December all the way through to the beginning of March. So almost 2.5 months here, the CCI really wasn't confirming that of a trend breakout. However, this has changed. The CCI is indicating a trend breakout, and this is indicating that of a valid, legitimate trend breakout. So we've got the transportational average breaking out above and to all-time historical highs. We do have a little bit of a slowdown on the candlestick, indicating a little bit of selling at this upper wick on low volume. So it'll be interesting to see what happens Wednesday, Thursday, and Friday. But certainly, if the transportational average can hold above, and I'm going to draw this on my screen right now, anywhere above, I just lost the actual rectangle. There we go. It's back on my screen here. I'm just trying to get the actual price points. It's coming in at about 9,460. You can just look on the right hand side of my screen. I'm just sort of visualizing this and just using my eye at the current juncture. But again, anywhere in this green box, 9,555 down to 9,460. As long as we can hold above this box And really, this is going to be the retest of resistance. If in fact this is a legitimate breakout, then we can assume that the transportational average is going to thrust and momentum is going to flow through, and this is going to be a sustainable trend. Of course, this can change if this is a shooting star candlestick and we start to see the development of additional bearish candlesticks, which I will be speaking about in that pro class on Saturday. Well, then we'll start looking at, of course, well, what's the difference between the transportational average and even potentially the industrial average if in fact we see some of these bearish candlesticks pull back down to this relevant green box on my screen. I can also show you the Russell. The Russell is quite interesting. We have had a mixture of both bullish and bearish candlesticks up and around this resistance swing point. It wasn't all that long ago where we got a high sort of upper wick again, or an upper wick, which again is indicating selling pressure. This does take the formation of a shooting star candle. We tried to pull back. We held at these rising exponential moving averages. We had a tweezer top reversal. This was dating back only the week just gone. However, again, on relatively low volume, more or less half of the average daily volume, we are trying to push back on up above this resistance area. Now, if I, pardon me, do the same exercise with the ADX and the CCI, you can see the CCI is trying to turn up. It isn't as extended as that of the transportational average, but we are still getting an elevated print. This is quite healthy, coupled with the fact that the ADX has been resting since mid-June. Okay, so we have been resting for maybe 2, if not 3 weeks. It does look as though it is turning up. And combined with the CCI, this is giving us a very healthy signal for a trend breakout, but only if we can close above 1,437. So if you see this take place on the transportational average, that of the Dow and the Russell, you are going to see these markets trend. Now, before that happens, I am still expecting the NASDAQ to pull on down or retrace a little bit further, to correct a little bit further. It doesn't have to happen, but I assume it is going to happen based off the candlesticks that we are seeing across the board on these three widely followed markets. I won't go into the detail of the industrial average, the S&P or the NASDAQ. What I do instead is just recap some of the stocks that we have surprisingly been triggered into, one of which is COP. COP triggered bullish above 45.47. I wasn't sure or certain if this was going to happen this week, but it is a trade we have been triggered into. So this is something that you should be paying very close attention to. The secondary trade is CVX at 105.47. That also triggered on Monday with pretty decent volume behind it. It was a relatively long day candlestick for CVX, and this is going off the back test of the breakout pivot. So you can see this downward trend line. And again, if I zoom out just to put this in, to show you some, I guess, the magnitude of support and resistance. This has been resistance on a number of occasions. It has also acted as support. We were looking for price to slow down and reverse anywhere in this green box, and it was also, again, the backward retest of this downward sloping resistance sort of short-term trend line. And that's exactly how this trade has materialized and played out. So a pretty decent entry here at 105.47. We're trading at 106.30, so we are up very close to $1. The other surprising type of stock or stock that we have seen is IBM. For a number of reasons. We got triggered into this at 155.23 a number of weeks ago, but since then it sort of flatlined. It moved sideways, which was a little bit frustrating. However, on Monday, we started to see an engulfing candle, which is a little bit promising. So, I mean, there might be a little bit of some grassroots shooting through on IBM. We have had to sort of hold on to this for a little bit longer than what I first imagined. But IBM, I mean, if we get any follow through above Monday's candle, this isn't a suggestion to be playing around with this with real money or even virtual funds. Really the entry, I mean, you're either in it or out of it, but this is quite an interesting trade setup. This is almost what we would assume to be a failed Bollinger Band squeeze breakout. However, it is still continuing to hold above that rising 18 simple moving average, which is just simply the midpoint between the upper and also the lower Bollinger Band as well. I won't bring up the charts of Goldman Sachs. I will not bring up the charts of Caterpillar. However, these two particular stocks are also very interesting at this particular point. They are getting, I mean, you can see the volatility sort of building. They look as if they are about to pop. Okay, they really look as though they are about to pop. So please, for those in pro, those trades are also brewing. Who knows? We might have some additional trades by week's end. But they are presenting, of course, additional opportunity as well, which, I'm keeping a very sort of laser focused eye on at this particular point. So having said all of this, friends, YouTube community around the world, I'm going to end this video. I'll be back later in the week for some more market updates. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.